Hi and welcome to Trade of the Week. The aim of this feature isn't just to focus on the best trade of the week. All traders know that we can often learn more from the trades that don't work out, so that's what I'm going to do this week. The trade in question was a short bet on the FTSE index, where ultimately the call was right, but the timing and the management of it let me down. Last Monday's open saw a crazy reaction to the weekend G20 Beano, with stock markets moving sharply higher. The FTSE gapped up from Friday's 52.89 close to open at 53.32, pushing up to 53.60 within the first hour. So there. For those of you not familiar with gap trading, the theory is that when a price opens at a very different level to the previous close, it will at some point retrace the move. Although of course, like all other aspects of trading, it ain't foolproof. But this was my strategy. I sold £3 of FTSE at 53.55 on the view that it would pull back to Friday's 52.89 closing level before then perhaps pushing higher. So I sold it in there. The plan was to increase my bet size only when my oscillators confirmed the turnaround. Monday's market was bouncing around like a teenager's hormones, so I decided to use a wider stop loss than normal. As my bet size was a reduced £3, my risk management gave me the scope to place my stop at 54.10, giving me an overall risk exposure of £165. My limit order was to close out £2 of the bet at 53.05 and then run the balance with my stop loss at break even. So, how did things pan out? Well, unfortunately, support was rock solid at 53.50 throughout Monday morning, and then the US session opened in a blaze of glory, sending the index to within a sniff of 5400. I held the trade overnight, but when Tuesday's dip failed to hold below the 53.50 level, I cut the position at break even. There we go there. The index failed to match Monday's high over the next few days, and on Thursday, a bout of global de-risking sent FTSE tumbling through the 5300 level to close the gap at 52.89, falling further to test 52.50. So, what to learn from this? In trading the gap, I ignored my other guidelines. The price had been above the rising 21 period moving average, which I use as my trend line. Also, my normal strategy would be to wait for the 5 period EMA to cross below the 6 period SMA, confirmed by an RSI below 47. But this plainly wasn't the case here. Granted, both the RSI and the MACD indicators were showing an overbought market, but there was no sign of a bearish divergence yet. The gap theory was okay, but the timing was too hasty in acting without a confirmed reversal signal. Ultimately, the trade would still have worked if I'd stayed true to my stop loss. Remember, we construct a trade plan to cut out the emotions from dealing. But this is still a tricky one. One trader's patience is another trader's refusal to cut a trade. My view in cutting the trade was that with support holding the price so well, we could see another leg higher. We did, but not enough to threaten my original stop loss. On this occasion I got it wrong, mostly because I strayed from a strategy that usually works for me into try something different. But that's what trading's all about. Have a good weekend.